Can you earn passive income while investing in gold? Sure you can. What's up guys, my name is Adrian and welcome to my channel on passive income investing. In this video, I'll show you how you could invest in gold while earning passive income in the form of dividends. And at the end of the video, I'll share my opinion on when is the best time to invest in gold. So many people think that investing in gold means buying gold bars and storing them in a safe somewhere. You definitely can invest in gold this way, but luckily we're in the year 2020 and not in the medieval times, so there's a much better way. Owning physical gold might make you feel cool because you can take selfies with small gold bars and put it on Facebook or Instagram. However, that gold is not generating any income for you whatsoever. The only way to make an income is to actually sell the gold bars. So what's the best way to invest in gold as a passive income investor? Should you buy shares in individual gold producer stocks? Well, you can, but these stocks tend to not only fluctuate a lot with the price of gold, but give very low dividends. So I wouldn't suggest doing this. The best way to invest gold, in my opinion, is by investing in income ETFs that have gold exposure. ETFs are a great way to invest in something specific and generate consistent income at the same time. Not only that, ETFs hold multiple companies in them, like a mutual fund, which automatically lowers your risk. So what I'll do in this video is show you 3 gold ETFs that you could invest in to get exposure to gold. You will not only benefit during the rise of gold prices, but also get consistent passive income along the way. Sounds great, right? Well, that's because it is. So although the 3 ETFs give you exposure to gold, they give you exposure in different ways. So it's up to you to decide which ETF you feel more comfortable with, or maybe you want to invest in all 3. It's really up to you. So let's check out these 3 ETFs in detail. All right, so the first ETF I want to look at is called the CI First Asset Gold Plus Giants Covered Call ETF. The stock symbol is CGXF. These guys give their distribution quarterly, and the annual management fee is 0.65%. So if we look at the holdings or the overview first, so these guys invest in a portfolio of securities of 15 really of the largest gold and precious metals companies. So if we look at the holdings, you could see here these are the 15 companies. You'll recognize a lot of them if you know about gold producers. So these are really the giant gold producers out there. That's why it's called Gold Giant. So you're really getting the best gold producers. If we look at the distribution or the dividend and the 12-month trailing distribution yield, or the average dividend for the last 12 months, is 6.67%, which is really good. And if we look at the latest dividend in 2020, just came out at the end of March, it's 32 cents. So if we compare that to the previous distributions in 2019, 24 cents, 15, 24, 20, you could see that there's a nice big jump in this distribution. It makes perfect sense because gold has been doing really well lately. So this is the CGXF ETF. The second ETF is called the Enhanced Income Gold Producers ETF. Stock symbol is HEP. This is from a company called Horizons. The very similar actually to the ETF I just showed you. The management fee is also 0.65%, sorry. And these guys also invest in the big gold producers in the world. So a lot of the same exact companies as the first ETF. The main difference, the primary difference between this one and the first one is that these guys give their distribution or their dividend monthly. So if you look at the distributions here, you could see the ones in 2020. So they've been gradually increasing as well. So it's 0.12 in January, then 13 cents, 19 cents, and now 20 cents. So it's going up as well because gold is doing well. If we open the distributions tab here, you could see that the dividend yield of the average dividend yield for the last 12 months is 4.96%. So a little bit lower than the other one, but the advantage in this one is that you're getting the distribution monthly. So pretty much the same. It performs the same function as the first ETF. You're getting exposure to the biggest gold producers in the world and getting a nice monthly dividend. Okay, last but not least, the third ETF I want to cover is called the Gold Yield ETF also by Horizon. So the stock symbol is HGY. The management fee is 0.60, a little bit lower than the first two. But the main difference, this one is completely different from the first two, is that it does not invest in gold producers. It invests in gold itself. So this is pure play gold. If you want nothing to do with gold producers and just want to invest in gold itself, this is the ETF for you. So it's made up of pretty much two of the biggest gold ETFs out there, the Granite Shares Gold Trust and the SPDR Gold Trust ETF. So these are the two biggest gold ETFs that are actually backed by physical gold. So this is a pure gold play, guys. The distributions are monthly, just like the second one from Horizon. So you could see it's going in an upward trend as well because gold prices are doing well. If we look at the dividend yield or distributions, the average for the last 12 months or the last year is 4.26%. So it is a bit lower than the first two, but if you want nothing to do with gold producers and just want to invest in gold itself, then this is the best ETF for you. If we just look quickly at the two ETFs that it has here, so Granite Shares, and you can see that they both say the same thing. It is among the lowest cost physically backed gold ETFs on the market. So that's the key here, guys. It's physically backed, so it's really, you're putting your money in gold itself. Same thing for for GLD, SPDR Gold Shares. So it's the largest physically backed gold exchange. So that's pretty much it, guys. If you want nothing to do with gold producers, this is the ETF for you. And also make sure to check out the links in my video description below. I will put all the links to every single ETF that I covered, so you can check them out and read up more on them yourself. So that's it, guys. Those are the 3 best ETFs I found in order to invest in gold. Personally, about 10% of my retirement account is made up of the first ETF I showed you. I feel that 10% is a solid enough number because it could provide a small cushion during economic downturns like right now, and also provides further diversification to your portfolio. This is the main objective for me personally. I mean, maximizing my income and my diversification. As we speak, my top performing stock is actually that gold ETF. It makes complete sense during this pandemic. So just to summarize, the first two ETFs are very, very similar. They both invest in about 15 of the biggest gold producers out there, and they both have a 0.65% annual management fee. The main difference is that CGXF pays a dividend every quarter and HEP pays it every month. However, the yield is a bit higher with CGXF, so it's really up to you. Do you want to sacrifice a slightly lower dividend to get the payouts monthly? It's up to you. The third ETF, HGY, is interesting because it invests in gold itself and not in gold producers by holding shares in 2 of the biggest gold ETFs out there, which are backed by actual physical gold. The management fee is a tiny bit lower at 0.60, and they give the dividend monthly. This is perfect for those of you who want pure exposure to gold and want nothing to do with the actual gold producers. So when is the best time to invest in gold? Well, that's an easy question to answer because gold prices usually behave the same way all the time. If you're a value investor like me, who is in it for the long haul, you always try to invest in something when prices are low so you can get a good deal. It's really not rocket science. So when do gold prices tend to go lower? Well, when the stock market and economy is doing great. This makes perfect sense because during these times, investors lose interest in the safety of gold and pile more money into stocks. It's once stocks go down significantly that gold prices rise like now. So the best time to invest in gold is during a strong bull market when gold prices tend to be lower. As simple as that. So let me know in the comments below if you agree or disagree with anything I said in this video, or if you found other interesting ways to invest in gold which provides you a steady stream of passive income. So thanks for watching, guys. I really appreciate it. Please ensure you're subscribed and hit the little bell next to that subscribe button so you don't miss out on any of my future investment videos. So take care, guys, and see you next time.